Hey guys, hope you and the families are doing well. Today's date is October 28th, 2025. So this session, there's going to be two parts. The first part, we're going to be focused on trigger bars. So that's one of my favorite swing trading setups, looking for leading stocks, whether it be your TMLs, that's your William O'Neill, Can Slim type stocks, the earnings, the sales, the estimates, new kind of product, new area of the market as well. So I'm going to take you through specifically what do trigger bars look like? What do you tend to see in the better examples of trigger bars? In the second part of the session, we're then going to be focused more so on entries and timings. So looking for, say, high day breakouts, ORBs, potentially Immorellos, buy stop limit orders, those kind of things. But I'm going to take you through four in Rocket Lab from various times as well. Tried to pick some different ones. I'll take you through four in Tesla as well, just again to kind of dial in the pattern recognition because they don't all look the same, but it's kind of similar characteristics that you are looking for. I'll then take you through Oklo and Rigetti and make the point that when you start to see trigger bars develop in the leading stocks of the day, whatever they may be, such as Oklo being a leader and Rigetti being a leader, both of those on the 8th of September, forming trigger bars in very close proximity to their 50-day SMA. So just making the point that when you tend to see trigger bars, you'll tend to see a lot of trigger bars heading into the session, and then also bringing in the context of the stocks character. So we'll be taking a look at APLD, which you can see trigger bar on the 29th of September and a trigger bar. Yes, and this was a stock that I was looking to target today, but based on the previous character as well, is why I was really interested. So we'll start off a little bit more high level, then we'll start going into some of the weeds with it. So let's start off with Rocket Lab, and I'll start off with probably the simplest one, which is the bottom left, and then we'll start going through variations. So on the daily charts, when I'm looking for buy stop limit orders, there's three main types of candlesticks that I'm looking for. That shakeout demand tails, gap down reverse bars, and also trigger bars. Obviously, trigger bars here is going to be the focus. So this here, the arrows that you see, I pointed to what I would determine is a trigger bar. Now, there's no exact science to trigger bars, but generally speaking, trigger bars are low volume inside days that appear around one or more key daily moving averages. So I'll say that again. They are generally low volume inside days that appear around one or more key daily moving averages. They don't always have to be inside days though, but generally speaking, looking for inside day or a very tight range bar. So that's going to be the key here. Tight range bar, because the phenomenon of the market is it will move from periods of price contraction to price expansion. So it's about looking for those periods of price contraction, but a nice kind of reference point is the key daily moving averages. So that's why I say around one or more key daily moving averages. Now for the momentum leader type stocks, which is generally stocks with a 20-day average daily range percentage greater than 4, 5, 6%. So you can see Rocket Lab, the current today is 7.81%. So for me, I deem that momentum leader. Again, anything kind of greater than 4 or 5% is generally getting into kind of momentum leader category instead of kind of TMLs. Your TMLs, your PLTRs, your Nvidias, your Robinhoods, they tend to ebb and flow also between kind of 2.5 and 4, 5% if things get a little bit more volatile. Okay, but what we're generally looking for is low volume inside days that appear around one or more key daily moving averages. Now, the three most important moving average for looking for trigger bars is going to be the 10-day EMA, the 21-day EMA, or the 50-day simple period moving average. So if we take a look at Rocket Lab here, the black line on my charts, that's the 10-day EMA. So you've got the 10-day EMA, you've got the 21-day EMA. There's a really nice checkout to Martel there as well. There was a really good Immorello on that day as well. Or the 50-day simple period moving average, which is going to be the purple line. Sometimes as well, you can get them around the 65-day EMA, which is the grey line on my chart. Okay, so sometimes you'll see the 50 doesn't hold, but stocks will trade down to the 65-day. But if you just want three to remember, for me, that's going to be the 10-day EMA, 21-day EMA, and 50-day SMA. That is where I'm looking for, again, these trigger bars, low volume, inside bars. Don't always have to be an inside bar around one or more key daily moving averages. So around the 10-day, around the 21-day, or around the 50-day. So if you start with Rocket Lab, the thing that you're ideally looking for is the stock is moving in a staircase manner. So if you imagine a flight of stairs, it goes up, it pulls in, it goes up, it pulls in, it goes up, it pulls in, right? Now, that is kind of the simplest thing, whereby a stock is really strong, and they're actually kind of the better setups in my view as well, is where the stock is so strong that it just powers higher, and then it starts finding support around the 10-day EMA. So you see this with Rocket Lab, pulls in, goes into the 10-day EMA. This is actually not a bad trigger bar there. It's one that I was targeting, and that goes through the high there. You can see how the volume dries up. There's also a nice one as well. I'll just kind of highlight that. But what are you generally looking for? And what you'll tend to see the best stocks do when they really just want to start powering higher is they'll find support around the key daily moving averages. They won't really kind of pull back, shake out, closes below them, maybe shakeouts around them, but you won't really see ugly bars closing below them that much. So the bottom example here is absolutely textbook for Rocket Lab, okay? Powers up, pulls into the 10-day EMA, inside bar, up it goes. Pulls up again, pulls back in, nice shakeout off the 21. There's your inside bar. Okay, so low volume inside bars don't always have to be exact inside bars around one or more key daily moving averages, specifically focus on the leading TMLs and the leading momentum leader type stocks. But this kind of staircasing pattern, when you get that, they can be ridiculously good setups. Let me just show you that kind of staircasing pattern as well with, say, a Tesla. So if you take a look at Tesla, there's three really good examples of kind of the staircasing pattern. Okay, you've got one example here, two examples here, and three examples here. This is more kind of obvious because the stock just goes up, starts finding support around, say, the 10-day EMA, inside bar, low volume, up it goes. Okay, not see every single time, but you know what I mean, right? These are kind of the nicest, cleanest examples. So if you take a look at Tesla here, so in the context of a nice uptrend, shake out underneath the 10-day, off the 10-day, and then you see this bar here, the one that I'm pointing to, it's not an inside day. Look how the volume dries up. So the volume dries up, tight bar, around one or more key daily moving averages, not quite an inside bar. That's why I say they don't always need to be inside bars. But if you look at the characteristics of this bar, if we were to just call this say, example number 4, it's very similar to the characteristics of this bar, right? The actual daily candlestick is exactly the same. And it's not far different to say the daily candlestick here. You're looking for those periods of price contraction in those leaders. Okay, from periods of price contraction come price expansion. But if you can identify this in the leading stocks where it just powers up like this, bounce off the 10-day, bounce off the 10-day, in there, inside bar, and then you're getting this kind of flag type pattern, generally building high lows. That is what the creme de la creme tend to do. With Tesla here, it's not so much the 10-day EMA, it's the 21-day EMA. Pulls back, finds support around the 21. In here, there's the inside bar. Then sometimes what will happen with these trigger bars, you get these inside bars, the volume dries up nicely, is they'll gap up. So if you're only targeting with, say, buy stop limit orders, you can sometimes miss them. Right, you see on this day in here, you get the gap. So that's why having opening range breakouts and being able to trade ORBs and having that in your trading toolbox as a tool within your trading toolbox is effective because you can get these really nice inside days. They'll just gap and power higher. And you're like, oh, that's really annoying. If I show you another example, I'll pull up AMD in a second and show you. But if you look here as well with Tesla, okay, moves up, pulls in, bounce off the 10, find support around the 10. This is a nice trigger bar. Look how this volume dries up. See how the volume dries up there? See how the volume dries up there? A really nice trigger bar, really nice trigger bar. A little nuance as well with trigger bars. The stronger the close, even better, basically. So you see with these ones here, closes essentially on the high. This one here on the high, and there you go. You got this nice flag type pattern developing in Tesla. True that badly, but hopefully you can kind of follow along there. Makes sense. Flag type pattern. There's the flagpole, and all of this in here is the flag. Generally speaking, you'd like to see high lows as well. So just to kind of layer a little bit of complexity here, if you start seeing a stock pull in, so nice rally, so you're thinking about it pre-base and then in the base and then the trigger bar, period of price contraction before the expansion. If you can also see higher lows developing in the base, which will generally be an ascending triangle, a flag type pattern, okay, even better. So Tesla, pullback number 1, bounce off the 10, pullback number 2, find support around the 10, then here gets really, really tight, and then up, and away she goes. This one over here is really nice. The only kind of thing that kind of lowers the quality of this one is Tesla here is obviously below the 200-day SMA, right? So here, low volume inside bar sitting around a clustering of key daily moving averages, 10-day, 21-day, just below. Really nice one. Let me just bring up AMD just on the gap example as well, because what you can find, AMD over here is a really, really, really nice example, like really nice example of a trigger bar, okay? This bar here, hopefully your eyes just went bing straight to it, right? It's right there. Now, it does actually look like a little, what I would call a shakeout demand tail, like a little kind of hammer type candlestick there. But it's still, for me, I would classify that as a trigger bar. It's a low volume tight inside day around one or more key daily moving averages. See how the volume just dries up here as well? But if you were looking at this with, say, a buy stop limit order, the issue here is it gaps. So you see the next day, I just kind of point to this, it gaps. So there is the gap up. Now, that can happen quite frequently. So, well, frequently enough, I think you need to know how to trade it as well. So that's why having gap up opening range breakouts, that tool within your trading toolbox, can be useful. Because on this day here for AMD, there was a really nice ORB across all time frames, essentially. There was a really nice one on the 5-minute chart, the 1-minute chart, 15-minute chart, because it gaps up, opens on, the lower the day, pushes, goes, displays a lot of intraday relative strength there as well. So necessarily be frustrated if you see, oh, it's gapping. That's why you have different tools within your trading toolbox. Then you trade the gap at the RB, right? So anyway, AMD there, really nice example. A little bit more kind of in terms of the base. Shall I go into some of the, I'll go into some of the kind of complexities around basis as well, right? Because not everything just trends up and starts bouncing off key daily moving averages. Something that can be quite good to look for is actually shakeouts around the lows of bases. So a shakeout where it shakes out, say, underneath a key daily moving average, underneath base lows, recent price lows as well. And it's paying attention to, well, what are the characteristics that you see down there? So institutions, algos will drive prices down, try and trigger a load of stops. So if you start looking at these lows here, we've got kind of, I'm going to point to one, I'm going to point to two. There's three main lows in this base prior to this trigger bar in this nice kind of period of price contraction, right? Yeah, shake out, demand out, then this inside bar. If you take a look around these lows, what do you see? I see a shakeout to Manta around the 21-day EMA. I see a shakeout to Manta around the 21-day EMA. And then I see this shakeout to Manta that undercuts essentially base lows, shakes out underneath the 21-day EMA, puts in this inside bar. This in essence is also a trigger bar, albeit better if it was above or around, say, the 10-day, 21-day. Puts in this inside bar, just saying there's hardly any more supply down at these levels. Look how the volume dries up and then up and away it goes. Would have been a good ORB out there as well. And then it starts tightening. So do pay attention to around the lows of bases. Not every time you get an undercut of a base low is it a bad thing. Oftentimes it can be quite a good thing. Depends on the characteristics. You start seeing shakeouts, gap down, reverse bars, and things of that ilk be pretty good. If I go for AMD and we go back to 2019 for AMD, if my memory serves me correctly. So if you take a look here, okay, I'll just zoom this in and stop it right on that trigger bar. So again, here's another one for AMD. I'm going to go into the character of what type of stocks like ORBs, and something that I think is very effective is pay attention to a stock's character. How a stock acted previously is a better indication of how it's going to act in the future. Whether you're trading ORBs, you're trading trigger bars, you're trading shakeout demand tail, you're trading in Morellos, you're trading in Maresha, whatever it may be, right? You want to look back, study the stock. Is how I'm looking to trade the stock, how the stock likes to move. So if we take a look at AMD, this obviously in 2024, but this here back in 2019, what do you see in the middle of the base? Well, here, AMD runs up, bounce off the 10, run, pulls back to the 21-day EMA. Now, this is a really nice bar to the 21-day EMA. It's a big old gap down reverse bar, right? So the prior closes here, gaps down, opens here, and then reverses nice and strong. What do you think the algos and institutions doing on that day? Triggering a load of stops, buying a load of things up, pops back up, consolidates, and then it essentially goes back to back inside days. This here is another really nice trigger bar. So low volume inside day. So tight low volume inside bar around one or more key daily moving averages. There you go, essentially going back to back inside day. And it's just had this gap down reverse bar about a week before. That makes sense? Then out she goes. Now, do they always do that? They don't always do that, but it's really nice to see them do that, okay? But those there, AMD and AMD there, those two are 9 out of 10. Like this one here, maybe even like 9.5 out of 10. And then start going through a little bit more. So what you'll tend to see is when a load of leading stocks, so hopefully you're kind of dialed in, watching the leaders, TMOs, momentum leaders, what you tend to see is they'll all start to form, maybe not all, but the vast majority of them will form a trigger bar, a shakeout to Mars or a gap down reverse bar on the same day, and then kind of heading into the next session. Now, it kind of depends how the session plays out for the indexes. We know this is an algo-dominated market environment, so it kind of depends whether the Qs and the SPYs had a just tight, low volume, boring day. If you see that, you'll see more kind of trigger bars, inside bars, like I'm going through here. If it's more of a shakeout for the indexes, well, you're more so going to see shakeouts for the leading stocks, such as say Oklo there off the 50-day, when Regatti is also probably going off the 50-day as well. Yeah, if I just go and these charts aren't particularly well lined up, but if I point to here, just kind of illustrate that point. This is the 20th of August for Oklo, and then this here is the 20th of August, put up here, for Regatti. So just trying to show you the kind of correlation, just is an absolute algo-dominated market environment. So we know Oklo has been a leader, we know Regatti, quantum stock's been a leader as well. So on the 20th of August, Regatti puts in this shakeout demand tail textbook off the 50-day SMA on the same day. I know these charts aren't kind of lined up over each other, but here, 20th of August, what does Oklo do? Was a shakeout demand tail right at the 50-day and the 65-day EMA. Coincidence? I think not. So then the next session, there's some pretty good shakeout demand tails to be targeting. But what we then see over here on the 8th of September, low volume inside day, the volume dries up for Oklo, just squashed in between the 50s there, the 10-day, 21-day is there. up and away. And it's a nice base, right? Starts tightening up. You could even back this out. Think, wow, that's a pretty nice base. You look at Regatti, got this pretty nice base as well. Big base, and then it's just sat there inside day, volume dries up. It doesn't really matter that it's red here because of the context of what other leading stocks are doing, and Regatti being their leading stock, quantum, right between the 10-day, 21-day, and the 50. You don't get those type of setups happen very often in leading stocks building these size bases. So you've got to realize the size of the opportunity in front of you as well. Then up and away. So they all do that. They don't all do that, but it's nice when they do that, right? But that's something that you'll also see as well. High correlation of, you may see, wow, this is just trigger bars galore heading into the next session. I view that as constructive. It could be gap down reverse bars, could be check out demand tails as well. Something to then also look at and think about is the stock's character, the stock that you're looking to target. So APLD, this is on my kind of focus list for today, looking for it to start breaking out through yesterday's high day, also ORB as well. Let me just turn that magnet off. Is when I look at APLD, so this is, we're filming this on the 28th of October. What do you see happened yesterday? Well, that low volume inside day, sitting around one or more key daily moving average. Been the 10-day EMA, 4 sessions prior, shook out right on the 21-day EMA. But if we cast our eyes back to the 29th of September, so around about a month ago or so, how eerily similar does this setup look like to this setup? Inside day, little kind of shakeout to Montel as well. The volume dries up, sitting right there on the 10-day EMA. So it's then all about trying to assess the stock's character and go, okay, the stock that I'm looking to trade, does it like to form trigger bars and then move higher? And if it does like to form trigger bars, so these often low volume inside bars around one or more key daily moving averages, if it does like to form those types of setups, well, where does it like to do it? What you tend to see is different stocks like to set up around different moving average, also kind of market dependent as well, right? The index is just corrected and the index is in an uptrend and just kind of pulling back in. So the index is in, let's say, April of this year when there's been a 20% correction. Where you're going to see these stocks setting up is going to be different to whether the indexes have just rallied, say, 10% and are building like a little Darvis box flat base into their 21-day EMA. It's going to be different context. But what I'm blabbering on about here is take a look back at the stock's character and go, okay, APLD did set a low volume inside bar, little kind of shakeout demand tail look to it as well, back there, and then it ran really well. Okay, well, it's doing the same yesterday. Coincidence? Probably not, right? For how the stock likes to move. Then you could take it a step further and think about things from a trade management standpoint and think, okay, well, when APLD last time formed this low volume inside bar on the 10-day EMA, how did it move after that? You could think about it from, say, a swing trading perspective here as well and go, okay, well, what would have been a really good moving average to optimize profits, both in terms of size of the gain and efficiency of the gain? So the time value element, right? Well, this is the 10-day EMA. So first close below the 10-day EMA. Well, that there. So exiting, say, there, or just sticking your stop below the day, but exiting there on the first close below the 10-day EMA. Well, that would have saved me an extra kind of 8% downside also relative to the 21. Then it did ping off the 21 and that's kind of getting back up. Okay, but what I could have done there is then just exited under the 10-day EMA and then just bought the stock back here when it resets. Or I could buy an Morello, lots of, again, different tools in the trading toolbox right there off the 21-day EMA. So you can then start studying the stock. Okay, how does it like to move? Is it a stock where actually what would have been better than, say, the 10-day EMA or the 21-day EMA is if and when it gets short-term extended from its 10-day EMA, we could then look to go lower the day. So up here on this earnings gap, it then gets start getting short-term extended, right? So we could go lower the day there. Let me turn this from blue to red to indicate a stop loss. That's orange. There we go. That's red. So here, okay, lower the day, short-term extended. If you look at the characteristics, this is on an earnings gap. Well, what does it do? It gaps up, opens near the high of the day, forms this supply shoot, can't go, weak close. It's extended from the 10-day EMA. And then what we could do is just go low the day there, and then we could go low the day here, and then we're taking out here. So we're then taking out here for a 50% gain, which is not bad. But that also then happens, what's that? 1, 2, 3, 4, 5. So at least a week ahead, maybe a little bit more, versus that 10-day EMA close on the 21st of October, which was then also less. So going low the day was more effective when the stock got short-term extended from the 10-day EMA. Just on the short-term extended point, so something else, just kind of blabber on from a trade management standpoint, is you can start looking back at the stock's character. So very much like we're looking at, okay, how does APLD like to set up? Does it like to set up around the 10-day, the 21-day, the 50-day? When it does, what does it like to do? Does it like a trigger bar? Does it like a shakeout demand tail? Does it like gap down reverse bar? But then from a trade management standpoint, because many of you would have been going, well, when do I know it's extended from the 10-day EMA? The stock will tell you. So if you go and take a look back at APLD, and we were just to take some rough measurements off the 10-day, how far can the stock get from the 10-day EMA? Here, 38%. And that's a this just visually looks extended, right? Very extended. Here, how far did it get? Okay, that time it gets about 25%. So here, when the stock starts getting up around about 35%, well, that's now indicating to us, based on the character of the stock, that's what extended from the 10-day EMA looks like. This stock, if we just took an average there, gets, again, if we go off not too many data points, but if we go here, let's say we have 38%, let's just make the numbers nice and round. Okay, let's just say it's 35% and 25%. Send the numbers around, right? When we look here and we go, okay, an average of when we look back, the stock gets extended from the 10-day EMA, big pull back in. Stock got extended from the 10-day EMA, pull back in. Well, if we took an average of 35% and 25%, that's going to be 30%. So we could have a ballpark figure in our head to go, well, when it starts getting to kind of that 30% range from the 10-day EMA, that's usually it for the stock. It can then start to look to want to pull back. So in that instance there, then we could start going to low of day. So the character of a stock helps us determine, okay, when do we potentially want to go low of day? Again, you can keep doing that exercise if you want more data points. Sometimes stocks kind of character and fundamentals and whatnot can change, but here, get short-term extended, how far does it go? 34%. Again, that's kind of in the ballpark of what we were just talking about. If we go and look at some other ones in here, okay, it doesn't really go extended there. Stock may have kind of like changed in here, but even here when it's gone on a big run, how far does that get from the 10-day EMA? That's going to be a completely different time. If you look in 2020, the stock's really liquid there. I would ignore that. The stock doesn't even really trade any volume. Plus, it's Q 2020 into 2021. So more reasonable is kind of looking at these more recent examples in the last 12 months or so, maybe 18 months. Go, yeah, 30% on average, low 30%. When it starts getting that extended, stock may want to pull back. So then from a trade management standpoint here, right, you go buy stop limit order, ORB, through the high of that inside day that formed yesterday. There was a nice ORB on it this morning. Buy stop limit order as well, which is kind of pushing up nicely. What could be, okay, when it starts to get 30% or so from its, I'm just going to put it at kind of $44, so it's a nice round number. At $44 or so at the moment, that can be extended, which can then kind of make sense because you could look at, well, it could run up here, test these prior highs, and that may then be something where going low day into that may make sense. Yeah, much depends how it unfolds. But hopefully that there is useful for understanding a little bit more about trigger bars visually. What do they look like in terms of looking at Rocket Lab in their various and let me just go through one more kind of example of it as well. Sometimes you can have a stock, but I'll finish off this, and then if anyone wants to join in during the bar by bar, just let me know in the chat. We're going to go through some stocks from today. What you can have here is stocks where they just kind of fall down like this, and this can also happen quite frequently as well, where it happens here with two examples of Rocket Lab. Okay, this is going to be, let's say, example A and example B. Now it's not necessarily one's better than the other. Example A is probably a little bit better in terms of how it actually sets up. What you can frequently have is when stocks close below, certainly leading stocks as Rocket Lab was here, when they close below their 10-day and 21-day EMA, they look absolutely terrible. And I think it's almost done on purpose. And the algos kind of wash it out, make it look terrible. You have then no interest in it because you're like, oh, this thing here it just looks rubbish, right? It's close below, whatever. I'm not interested. Same here, okay? So something to really pay attention to, I think, is when you get a bar that closes below, so daily candlestick, as we can see here. So this example here, that closes below the 10-day and the 21-day EMA, and it may just be the 10-day or it may be, say, the 50-day, kind of depends on the context, right? But here, closes below the 10-day and the 21-day, close below the 10-day and the 21-day. Pay really, really close attention to the next bar. I think this is a little bit of kind of a clue that again, it's mostly just algorithms now, but algorithms, the market operators that you want in there are in there. Because what you tend to see with the better examples is, I'm just going to point with a red, just so I don't kind of cover it up too much. Point with a red there and like here. Pay really close attention to the next daily bar. What do you notice on the next daily bar in both examples? So it's going to be that bar there, 9th of September for Rocket Lab 2024, and then the 16th of June 2025. Really nice reversal bar. It's just saying. The algos are in there. The market operators that you want are in there. When you get this kind of weak close and then, straight back. Like it's just designed to trap traders who are potentially trading Rocket Lab on the wrong side. Just either get them to start shorting it here or get them to exit their position. A lot of people will use the 10-day EMA and all the 21-day EMAs trading stocks, myself included, right? Stock closes below the 21-day EMA like that. In the vast majority of cases, I will exit the position. Sometimes, more so frequently now, I'll actually put my stop loss on the low of that bar. because this happens so much. You'll get a leading stock close below the 10-day or the 21-day EMA, and then it will just reverse like this. And then in the next 3 weeks, it's up 50%. Does that always happen? Doesn't always happen, but you've somewhat got to think about market operators, algos are trying to make you do the wrong thing at the wrong time. So you can see it here with Rocket Lab as well. Closes below the 21-day EMA. That is a sell signal for many people who use 21-day EMA as a trailing stop. But what happens? Well, it then turns around and powers up again, 50% in the next couple of weeks, right? So you just want to be aware of that. But if you get this nice reversal bar and then it sets up, check out the market, trigger bar, gap down, reverse bar shortly afterwards, I kind of think that was some algorithms trying to get me to do the wrong thing at the wrong time. So this really nice inside day, 10-day, 21-day, volume dries up in here. Nearly an inside day, but just really nice reversal following this. So you've then got to realize the context of the chart as well. And you'll also see this quite frequently as well. But this one here, Rocket Lab down here, as it pinged off the 21-day EMA. See how it goes and just triggers a load of stops. Rocket Lab, nice. There's probably a load of stops just sat in the market right here, and then it just goes and hits them, pops back up, inside day, off it goes. So realizing that kind of context of the chart as well is useful. So I'll wrap it up there on trigger bars. Let's start going through a couple of things from today. See if we get any willing volunteers. Otherwise, I can rock and roll by myself. Let me just pull up a couple of charts up there. Okay. Let me take you through a couple of the nuances, because this is happening pretty frequently in this market. So I don't know if we'll get through all of these, but we will we'll give it a go. Okay. If you're looking at specific stocks, brilliant. Thank you, Darren. I'll bring you in a couple of minutes. I'll do one of these examples, then I'll bring Darren in to go through a couple of others. So when you're looking at specific stocks from specific themes, what you tend to notice is they will start to go together, both in terms of whether you're looking at opening range breakouts, in Morello's, potentially buy stop limit orders is what I'd be looking for as well. Okay, so you're looking for that group theme confirmation. Ideally, they are both strong and displaying constructive action, but then really trying to dial in on the nuance of which is the strongest and potentially why. Because you may say, oh, it's this strong stock going, but there's a couple of nuances. If you can start picking up on it, I think it's extremely helpful, actually. So let me go through SMR versus Oclo, then I'll go through SMR versus the Qs. Then I'll bring Darren in. So let me start playing this forward. This is 2-day session for SMR and Oclo. Both of these clean alternative energy stocks. They've displayed a lot of strength today. Okay, so I'm going to zoom both of these charts in like this. Now, if you were looking at the daily chart, what would you say is stronger? I would say that Oclo is currently stronger than SMR, because Oclo is around its 10-day, 21-day, the 50, 65 days here. SMR has had this big kind of washout like this, and now it's sitting around a clustering of 10, 21, 50, and the 65-day EMA being the grey line on my chart, okay? And this will happen really frequently in this market as well. Again, if you actually look at the character of the market, there's loads of Vs. Like there's Vs this way and there's TP10s like this. It's like Vs and it's TP10s, yeah? If you take a look at SMR, it's a classic example. There's a V here, TP10. You know what I mean? I can't think of a better way of describing it other than TP10. Like here, or an inverted V, right? Just how the algos move the market. Like this is how the market moves nowadays. It's fast, really fast. So anyway, I'm going to play this forward. So let me play this forward in here, in here, in here, in here. Let me just make sure I don't go forward too much. Okay. Okay, here we go. So if you take a look at Oclo and SMR, now both of these stocks at this time were displaying intraday relative strength versus the major indexes. But I'm then going to bring this back to swing trading as well, because I get a lot of questions. We are in such a choppy market. I can't explain to you really just how choppy it is, other than it's really choppy. It's really volatile. So whether you want to hold stocks intraday, so basically you just day trade them, or whether you want to hold them for a swing trade, I think really depends on how strong the stock is. How does the action of the stock unfold, and then thinking about what you see intraday relative to the daily chart. So you're trying to piece them together and go, okay, I've seen a really nice strong day here, and actually the stock is right around the 10-day, 21-day, and the 50-day, and it's built a 3-month base. Stock could be on a cusp of going on a big run, right? So if we play this forward here, well, I'll actually stop it here. If you were looking at SMR and you were looking at Oclo, and I try and line these up, on the daily chart, bit more of a fair fight now. Okay, SMR is kind of just underneath the 10-day, 21-day EMA, and I would say Oklo is generally it's kind of sitting on the 21-day, and the 10-day is just that. What would you say is stronger so far? And if you can pick up on these little nuances, I think it'd help you so much. So if you take a look at SMR, SMR starts off with the doji, and then it just trades inside that 5-minute range. See that? You see the range of the first 5-minute candlestick? I'm going to mark it up for you. If we go there and we go here, see how it just trades inside that range, 40.32 down to 39.18. Can we say the same thing for Oklo? I don't think we can say the same thing for Oklo. Actually, on numerous occasions, it's violated that opening 5-minute low at 136.51. It did it in here. It did it in here. If we look at the price relative to the 5-minute 6 EMA, it's kind of just starting to get above. So here you could be thinking, in Morello time, right? Sitting right there on the 21-day EMA, the MACD is starting to turn out. You could be, oh, gonna go there in Morello. Now, there's a couple of reasons why SMR is so much stronger here. One, it's not violated that low. Didn't even get near it in here. It's just trading inside of it. From periods of price contraction come price expansion, especially when it's showing intraday relative strength relative to its peers, which is Oklo, its kind of big brother, but relative to the SPY. And I'm going to take you through the SPY chart in a couple of minutes, right? But here holds the 5-minute 6 EMA, holds the 5-minute 6 EMA, holds the 5-minute 6 EMA, holds the 5-minute 6 EMA. MACD is positive. MACD is not positive for Oklo. SMR is screaming, I'm stronger, I'm stronger, I'm stronger than Oklo. And as you will see, it's screaming, I'm stronger, I'm stronger, I'm stronger than the Qs. Now, SMR also likes to Immorello. It's one of my favorite Immorello stocks and ORB stocks, as is Oklo as well. They've been pretty good over the last 18 months, 2 years or so, okay? But this here is screaming strength. So actually, SMR on the high of day break, as it reclaims the 10-day, 21-day EMA, I'm going to be much more interested in that than the Immorello down here on Oklo, okay? Now, when it starts going, again, this is just an algo-dominated market environment. This is not coincidence. This is just planned. Hopefully you can kind of start to see it. Look at the pop in volume. Good start through high day. Look at the pop in volume for Oklo. Good start with the Immorello. MACD's now gone positive, but for reasons that we explained, SMR is stronger. SMR on the daily chart has now reclaimed its 10-day, 21-day. I'll zoom right into that. There we go. SMR reclaiming its 10-day, 21-day EMA. Nice through high of day. Is Oklo as through high of day yet? As far through high of day as SMR? Is that the way of saying it quickly? No, it's kind of just peekabooed its head there, yeah? And it's now into the 10-day. Oklo is now reclaiming stronger. Nice closes on them. Okay, SMR here is a lot stronger. Now, if I play this forward, do you see how SMR, Oklo was kind of and ahed around its 10-minute, 5-minute, not 5-minute, 10-day EMAs, what I'm trying to say. See how it's kind of and ahed around its 10-day EMA? What does SMR do? SMR's just gone. So a lot of you trading in relative trading ORBs. For me, whether I want to hold for a swing trade or not in this market in this market environment, there's no preconceived notions. There's no I'm going to hold Oklo for the next 3. I have no idea. No idea. The market moves way too fast to even try and determine that. It's really based on the action of the stock. So here with SMR, I'm going, wow, this is really strong. This is really, and we'll go through a couple of the uranium stocks, UEC and UUU. May do those next when Darren comes in. So if we then take a look here, now I'm going to play forward. There's a supply shoot for both of them. So we look at here, you go, okay, Oklo, 5-minute supply shoot, SMR, 5-minute supply shoot. Now you also get to see a lot of strength on the pullback. So take a look at this as they start to pull back. What do you notice already? 2 candlesticks post the supply shoot. There's the supply shoot. There's the supply shoot. Oklo goes back into the 5-minute 60-minute. Does SMR? No. SMR's back to effectively making new high of days. Just keeps on going. This is strength. So if I want to hold a stock for a bigger move, I want to try and hold it for a swing trade, I want to see the action of SMR. Keep going. Keep being strong. Oklo rolls over below the 5-minute 60 EMA. SMR still holding above. Keep going. See how Oklo's now below? Its 5-minute 60 EMA was there, and now it's trying to get back up, forms a supply shoot. SMR is moving back into new high of day territory. But this strength, you could pick up on the strength. Now, are you going to be 100% right when you do this? No. But you got to try and understand why are you right, and did you miss things? If you went for Oklo, well, why did you go for Oklo when SMR was stronger? Like these are it's such small details in this market environment, but it makes such a difference because you'll see this with it could be the precious metal miners, or it could be the drone stocks, or it could be semis, or it could be space satellite, or whatever it may be. But the stocks will give you an indication before they make their move, in the majority of cases, in my view, of which are going to be stronger. So if we just play this forward, yeah, that's all that. So SMR here has gone on a big move. It's gone over its 20-day ADR percentage. So move off low of day, 13%, ADR 11%. Whereas take a look at Oklo. It's now languishing back around low of day. But the strength for which one was going to be stronger was told to you here. It was before the move even started. SMR was saying, I'm stronger, I'm stronger, I'm stronger. Now, if I just show you that relative for SMR, I know you know what's going to happen with SMR. But if I show you for SMR relative to the indexes, so if we play forward 1, 2, 3, 4, I get one more bar, I think, 5. So, oh, didn't do the 5-minute chart. A second. Let me load this up again. So if you look at SMR now, so we were looking at versus Oklo on this prior chart and going, okay, SMR stronger than Oklo. So it's really just trying to be in the right stocks at the right time with the right trade management and just constantly try and focus on the leaders. So play this forward 1, 2, 3, 4, 5. One more bar. Okay, so now we look at SMR versus the SPY. Look at this here. SPY is down, 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 down like this. What does SMR do? SMR is going, you can't drag me down today. Triple keys on SMR. SMR is literally saying here, you cannot drag me down today. Don't care. Whatever you do, I don't care. I'm going high. Just ease off, SPY. Just stop your downtrend for half an hour and I'll go. I'll rip. This is what it looks like. See how the SPY is just down, 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 below the 5-minute 60 MA, below the 5-minute 21. MACD is negative. It's a big old gap and fade type bar forming on the daily chart. Whereas SMR here is just saying, I want to go, I want to go, I want to go. Do you see it? This is what, again, many of you probably heard that analogy, a basketball being held underneath water. This is what it looks like. But not only was SMR that strong relative to the indexes, and look, this is then not by coincidence either. This is that basketball being held underneath water. When SMR breaks high of day, that we're just going through with Oklo, and the pop in the volume, what does the SPY do? It stops going down. Yes, it forms this supply shoe, but it just momentarily pops up. Momentarily pops up like that. That's all SMR needed. That's all it needed to get going. Now, if we just play this forward, see how the SPY then just stops going down. It just eases off a little bit. And the moment the SPY eases off, which is at 9:55 a.m. New York time, Eastern time today, that's when SMR makes its move. That's when it goes. It just needed the SPY to just relent for a little bit. Now, SMR here, just to then try and then kind of link it back from a trade management standpoint, swing trading as well. Let's clean our chart up there. So say you get the high day break here, okay? So this can be your entry, tight initial stop loss relative to the 20-day ADR percentage. The initial stop loss is about, let's call it 3% versus an ADR of 11%. You're less than a third versus the 20-day ADR percentage. A really nice favorable metric there. Now, as the SPY goes back down to lower day, so if we see this here, this live at the time we're filming this, that's kind of shakeout developing down there, isn't there? And that'll be a confluence as well, if we go and stick yesterday's high of day on. So it's shaking out underneath yesterday's high of day plus today's low of day. So maybe this wants to go and in Morello and go on and run into the close. But when I then look at SMR here, SMR is nowhere near low of day. This is a stock telling me, given its strength right here, right now, we're filming this currently live, I'd go, SMR, I want to hold it as a swing trade. Okay, take some off here, closes below the 5-minute 60 MA, take a third off, take half off, take a third up there because of the risk multiple on that. Chain up over 2 times initial risk. Yeah, take a third off, still got 2/3. And then as I look on the daily chart, you go, that's a big base, isn't it? Look at that on the daily chart. Nice big old base. And it's just had a big kind of Wyckoff facey spring down here. Oh, big washout. Back up it comes. But look at the strength here today relative to the SPY on the daily chart. You can see it intraday as well. So this is a stock telling me, try and hold me for the minute, at least for the minute. Now, this may roll over into the close and look really, really weak. It's fine. But right here, right now, I think this stock is really strong. The stronger a stock is, the longer I want to hold it. So the stronger a stock is, the longer I want to hold it. The weaker a stock is, I don't want to hold it. Because weak stocks, what you'll tend to see in this market is they just go literally that fast in this market. So hopefully that's useful there in terms of trigger bars, in terms of thinking about intraday relative strength and all that stuff. So let me bring in Darren.